Hello traders, Gary Wagner here, just about 1 o'clock in Honolulu, 7 o'clock in New York. It is Wednesday, 29th day of July 2020, and this is the Daily Report for Gold and Silver. We continue to see gold move to new all-time record highs almost on a daily basis. Today we saw about a $22 move in the precious yellow metal. We also sent out a trade alert, and we will discuss that in detail when we pull up our technical studies. But first, to the price board. Gold continues to trade almost daily to new all-time record highs, with spot gold trading at $1,970.40, a net gain of over $12 today, and within $30 of that elusive $2,000 per ounce. We did send out a trade alert recommending entering the trade in December gold. Traders taking that call got in roughly at 1978.5. Current bid on December gold is 1986.50, putting it up $22.60 on the day. Silver also gained approximately 11 cents at 24.41. Platinum and palladium were both lower on the day, with platinum giving up approximately $25, 961. Palladium lost about 5.5%, a drop of $130, currently at $22.35. And most importantly, the dollar continues its dynamic drop, losing about 0.4% today, closing at 93.24. That is a 10% decline from the highs that we saw mid-March of this year. Let's take a look at our current technical studies and talk about our current trade. As you know, I typically start by looking at a couple of gold charts or silver charts, but it is the US dollar that has really been aiding this phenomenal rise to all-time record highs in gold. And as you can see, we are now at a 2-year record low for the US dollar. I'm going ahead and compressing this weekly chart so you can get a sense or a feel for what we have seen over this last couple of months, really since March, because the US dollar was trading at approximately 103, and that was in mid-March. And that, of course, is when the epidemic became a pandemic and everything changed. You can see that high right here. We are currently trading at 93.24. And what that means is that the US dollar has devalued approximately 10% in the last 4 months. The dollar is certainly in a free fall currently. And based on our technical studies, we could see the dollar trade as low as 92.37, and that is the 0.618% retracement, but a steep decline really could take it to these lows that we haven't seen since 2017, right around 88.97, let's call it 89. That is where I would look for the dollar to eventually find some support if in fact it breaks through this critical level at 92.37, which takes us to our current trade. We did send out a special trade alert this morning recommending that traders initiate a long position in December gold. The reason that I'm working with December gold rather than October gold is although gold trades in terms of months every other month, the volume in the December contract definitely outweighs the October with about 500,000 in terms of the volume, extremely brisk. We can see that currently we are trading at approximately 1986 to 1987, and that is putting it up about $9 on the day as we trade now in Australia. We entered our trade at 1979.5. We put our stop at 1960. It is a tight stop, which is why I actually issued the trade alert as the press conference was going on with Chairman Powell after we had witnessed most of the extreme volatility that we saw during the day. We also followed that up with a recommendation for those trading spot or Forex gold. Traders, my recommendation is to maintain your current long positions in gold, to maintain your current stop, As far as our ETFs are concerned, my recommendation is to maintain our long ETF positions in GLD, SLV, as well as NUGT. However, tomorrow I will recommend stop placements since there are now some considerable profits on those trades. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.